Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, tuning in each and every week. This week is like every week, except that we have a brand new federal administration. The Federal Open Market Committee meeting is meeting Wednesday and Thursday of last week. And the economic news for the year 2020 is just now starting to roll in. We've had information on a number of different companies, and a number of them have done a lot better than people thought. So we have revised downward the GDP for last year. Looks like a negative 2.7%, which if you consider Q2 was negative, I think 33%. Anyway, it's quite an astounding comeback. And I think by Q3 this year, we will probably be roaring along, and they're projecting this year to be about 4.3% in terms of growth. Now, in the last administration's best year, it was about 4.3%. And remember, that came on the heels of that huge tax cut. Now, again, Jeff Barton, Mortgage Voice, thanks very much for listening. And Daryl, do you have the number of those terrific Big 8 podcasts that we can be heard on?
I certainly do, Jeff. It's Apple
Great.
Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Yes, and on YouTube, Jeff Barton, the Mortgage Voice, you can see this show. Yes, we shoot it for a couple of the radio stations and YouTube, so you can see my voice and you can look at pictures of our terrific guests that come on the show, phone numbers, contact information to get in touch with them. We are as of now, we're on 5 stations in 3 different states. We're up in Tahoe at K-Tahoe. We're in Las Vegas at K-Ship at 1400 AM. We're down in Albuquerque, New Mexico. What's the call letters down there in Albuquerque?
It's a K-Mine country, K-M-I-N.
Exactly. Great country western station. And so if you want to hear some great up-to-date information about loans, where to get loans, how to get loans, what's happening in the marketplace, that's the place to go in Albuquerque.
Plus,
Also, go ahead.
If you love some Willie, it's on the radio.
Yes, I loves me some Willie. You know, back in the day when country western was just crossing over into mainstream, there was a great album by Waylon Jennings and Willie Nelson. And in those days, it was like, wow, what kind of music is this? Now, anybody south of the Mason-Dixon thinks I'm an idiot right now. But for me, where I was sitting and listening in my car back in those days, and we're talking, gosh, that had to be in the 70s that came out, wasn't it? Daryl?
Yeah, the Highwayman obviously was Willie Nelson and Waylon Jennings and the boys. Ladies
Right.
Love Outlaws, right?
Yeah, I mean, it's great music, and yeah, I just for people who listen to country western, now 45 years later, I have just a great deal of family down there in the southern part of the country, as well as out west. A few people left up in the Northeast, so we're kind of spread all over the place. And anyway, for those people, please listen in, tune in, and listen to what we've got going on. I believe it's Saturday we run the show down there, don't we?
I think it is, yes.
Okay, very good. And also in the Inland Empire in Southern California are really a flagship KCAA, the KMET, KCAA, the 2 stations that we run there. They run the video feeds, so you can go to their stations, look me up, Jeff Barton, the Mortgage Voice, and see what we're doing. Okay, so we talked a little bit about the Federal Open Market Committee meeting that's happening or has happened last week. Not a lot going on, just a reaffirmation of the purchase of mortgage-backed securities and the purchase of treasuries to the tune of about $120 billion a month. You know, it's interesting. During the last few days of the Trump administration, there was a great push by Treasury Secretary Mnuchin. And I believe a lot of the allies of the people who hold paper for the GSEs, Fannie Mae and Freddie Mac, to push them back out into the private sector. They're currently under receivership, as they have been since 2008. Dodd-Frank, when Treasury bailed them out to the tune of about $165 billion. that money's been paid back forever. And anybody out there who's listening who doesn't really understand how this works, or what happens when the federal government bails out quote unquote industries, whether it's the airline industry, the car industry, whether it's, you know, as I said, the banking sector, or the GSEs, Fannie Mae and Freddie Mac. What happens when that money actually gets paid back? Well, two things can happen. One of the things that can happen is they print more money, right? And during those days, I believe the Treasury did print more money. However, there's another way to do it as well, which is to sell debt. Now, the current way we're doing any of these, I guess not bailouts, but certainly by the Fed purchasing mortgage-backed securities and treasuries, what they're doing now is they're selling debt or printing money. Which is better? I don't know. I'm not an economist, but I'm just telling you that that's what they're doing. One adds dollars to the money supply, which can bring upon inflationary aspects, and the other one adds debt to the federal debt. And Daryl, do you know what the federal debt is currently?
No, I don't. But it's got. If we're adding another 2 trillion to it for the bailouts, it's got to be 7 or 8 at this point.
Okay, so the national debt currently is 21 and counting $trillion. Okay, take that in for a second. $21 trillion. And as I said last week's show, when I was a kid, when we tried to figure out what the big numbers were, I mean, $1 million, when you had $1 million, you were set for life. Well, now, of course, we're talking about companies becoming $1 trillion companies, not $1 billion companies, which $1 billion to me 20 years ago was a big number. Now they throw it around, and $1 trillion is now in the lexicon of what we're talking about in terms of financing, financial information. $53 trillion, yes, that's what the mortgage market is in the US. The mortgage, let's see, I think the GDP in the US, I want to say, is less than 21 trillion, which means that the debt is bigger than the GDP. Now, we're all told by economists it's not a big deal one way or the other, whether the debt goes up or goes down. It's about balance of payments. And if we have interest rates less than what the rate of money we have to pay to keep current on that debt, i.e. you're paying the interest, then we should be okay. Problem is what happens when real estate prices go down, what happens when the bills become greater. That's when we get into some problems, and we're seeing some hawkish behavior finally out of the Republicans, acting like Republicans again, as opposed to sycophants to the last administration's whims, whatever that particular day brought about. Fiscal responsibility and leaving people alone. That's my personal ethos. And quite frankly, I think it's a good watchword for most things we do in government. So let's move on now to what we're experiencing with the federal government, the oversight being CFPB or the Treasury in some respects, or FHA HUD. We have a new sheriff in town, and that new sheriff, I think I mentioned, has got the guy's name, Alto. I forget. I think it's Ravit Alto, taking over from Mark Calabria, who was installed, of course, after the long fought battle whether the president could fire the CFPB, whether it's considered constitutional or not. Well, I think the president can fire. Anyway, he asked Calabria to step down, and he did. And now this new person will be sworn in. I think a lot of the financial people are getting in line with the Senate approvals. Janet Yellen was approved as Treasury Secretary, which I happen to like that pick. She's conservative. She's got a ton of experience. And believe me, we are not out of the woods at all in terms of both the pandemic and, for the purposes of this show, the financial aspects of the I guess what happened and is happening as a result of the pandemic. Businesses shut down. Although in California, for those people who aren't in California, this may be happening already in your states. Government officials are being sued. And so therefore here in California, we just recently saw in a lot of the affected counties, especially in, I don't know if anyone follows that color chart. You follow that color chart, Daryl?
I've seen it. It doesn't seem to move too much.
No, well, exactly right. But we're in purple here in Southern California. And I say here because that's where the show is broadcast, where I happen to have my home. I know we're in several states. We're in New Mexico, and we're certainly in Nevada and up in Central California. But the purple is the worst place you can be. But even as a result of being in purple, because of the pressure on the government entities, whether it be Governor Newsom or somebody else, they have opened up to restaurants and such. Anyway, I'll get back to it. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening to the show. Thanks very much for tuning in. We bring to the show a lot of different kinds of information, mostly about real estate, mostly about mortgages. We try to touch upon some entrepreneurial skills of different people when they come on to give you the idea that, employment is not just working 9 to 5 for a company. We also try to bring some public awareness to items and issues that are of great concern to both the show as well as anybody out there who's got a heart and wants to help. This is the time and a time by which helping others has become the focus and center point through COVID and some other issues, but a longstanding issue, and a person who has been on our Las Vegas real estate TV show several times, Lena Walther from Awareness is Prevention, has come here to talk about human trafficking, and especially in the local area. I wanted to bring her on, and thanks, Lena, for coming on the show. How are you?
I'm doing good. Thank you very much for having me.
Thank you very much for coming on the show. I didn't say that you were also, are you still the Swedish consul out there in Las Vegas as well?
Yes, I'm the Swedish consul for Nevada. That's correct.
Okay, excellent. Well, you've been in a lot of different capacities trying to bring awareness and help to human trafficking. Could you describe, first off, what it is, how it affects in Las Vegas, and what does it look like?
Yeah, well, what's happening now, after this pandemic, a whole year of schools being closed, the public schools being closed, and it is a disaster. It has turned into 18 suicides in Las Vegas alone, and 3,100 kids have been asking for help, and this pandemic has caused so many problems for the school children. They can't see their friends, they can't play any sports, everything is online. And the second part with that is now they're online, and now they go into all these different sites, and they're being targeted by all these traffickers. And sites that you would never expect having pornographic images or minors on them. For example, one being onlyfans.com.
What's it called?
Didn't start off that way, but has turned into it. And the traps these kids fall into is just so sad. And in addition, to be locked up in households that maybe is not the best ones for the kids, when school was an escape to go to, and teachers should notice things, and they had social workers and counselors to talk to. None of that exists right now, and this has been going on for a year here. It's horrific.
So it's possible that the scope of the problem isn't known because of the fact that there's very little oversight of what a child is doing at home, online, and how they're being targeted. Well, yeah. What are you doing in terms of trying to assist in awareness?
In New York Times, yes, this morning, talking about Las Vegas and a lot of facts. And when the statistics come out, it's going to be a shock to everybody.
Well, describe some of what they're talking about in the Times article.
Well, they talk about, as I mentioned, no one has been to school for a year. No one has played sports. Some are falling way behind in academics. Some kids are actually doing things online, but the majority is not. And they have a monitoring system that kids can call into if they have this is more on mental health than actually
Right, of course.
with the school children. And they had
Yes.
over 3,000 alerts alone of kids reaching out asking for help. But it's very hard to give them any help. And
Right.
and as I mentioned, 18 suicides. And the youngest one was 9. I mean, it's horrific what's going on. And all these problems go hand in hand, from mental health to
Of course.
domestic violence to trafficking.
Do you think that the online proliferation due to the pandemic is something that I guess we can do anything about? What can we do? What's that?
It has increased exponentially because that's where they
Right.
find the kids now. You know, they don't find them out and about as they used to. They find them online. That's where they sit in front of a computer.
Can you describe a typical way by which somebody would be lured into a situation where, this could become, them?
If we go back to a site like OnlyFans, for example, they get lured into posting some photos, and then they realize the more daring photos or videos, they can make a lot of money. And keep in mind, a lot of people have lost their jobs, their parents have lost their jobs, there isn't enough money, and it's very tempting to post something and then realizing, wow, I can make money on this. And that's fine if you're 18 and over. There's plenty of celebrities doing it and other people, but it's the minors that's the concern. And none of these websites are verifying age. They don't have any age verification that works.
So there's no oversight. There's no way by which you can curtail any of these activities. How are the children getting paid? Are they getting paid through just Venmo or PayPal or?
Yeah, the credit cards and
I see.
PayPal. I don't think through PayPal. PayPal is pretty strict, and they get paid. The sophisticated system that these websites have, and they take a little portion, and then the content provider gets the rest.
I see. What are you doing specifically with awareness is prevention to try to combat what we're seeing?
Yeah, we're working with a group in Washington, D.C. Since we can't travel there ourselves, we're working with a lobby group in D.C. that's helping us contacting the legislators on Capitol Hill. And we got quite a few of them interested in doing something. And we're trying to actually stop the payments.
Right. That's why I brought it up. Right.
This takes time. It's not a quick procedure.
Of course. Why is that? Why do problems like this have to take so long? This isn't a new problem.
No, it's not
Irritates
a new problem
me.
at all. It's just that it has escalated to such enormous problem now with the pandemic, where kids are sitting in front of the computer. It
Sure.
wasn't so bad before, and for example, the site OnlyFans had a lot of other postings on it, and mainly it was adults using it. It's just now you have all the kids. They have another site, which of course the name itself says what it is. It's Pornhub, and Pornhub is getting a little bit in trouble because it's been a lot of protests, and actually Visa and MasterCard stopped dealing with them.
Well, that's where these sites have to get hit in the pocketbook. Otherwise, they'll just continue.
Yeah.
Yeah, and the ability to be able.
A lot with, and hopefully we will get results coming up, and that will be nice. And then I'm also involved with a little bit with the school. We used to train teachers, social workers, and
Right.
in the school district. We're trying to come up with a way how we can do that now and escalate that training despite the fact that the schools are closed.
Lena, we have a minute left. Could you tell people how they might be able to get in touch with you to maybe donate if there's a way by which they can help in that way?
Yeah, absolutely. Our website is aipnv.org. aipnv.org. There are donation buttons there, and we are in process of actually redoing the whole website. So wait a few days, maybe a week before you go on it, because it's a lot of new content and
Great.
a lot of information on it. We will have Facebook page, Awareness is Prevention.
Lena, thanks very much once again coming on. This is something I want to continue to follow on, bring awareness to our local audience there in Nevada, as well as some other places that the show is. Thanks very much for coming on the show again.
Thank you for having me. I really appreciate it. Yes.
Thank you too. That's Lena Walter from Awareness is Prevention. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, listening to the show. We're on 5 radio stations in 3 different states, and I want to thank all those people for each and every week. We have some great numbers, great feedback. People who are interested in listening to boring financial information are really people who need housing information, who've never done it before or who have done it but want the update on what's happening today. All those people make the show what it is. And again, thank you very much. It's Jeff Barton, the Mortgage Voice. Go to YouTube if you'd like to see the show. We shoot the show each and every week for YouTube, as well as a couple of radio stations that have video feeds. And Daryl, we have 8 different podcasts we're on, right?
We certainly do. Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Excellent. Thank you very much. Okay, enough for the housekeeping. What we do each and every week is bring to you better guests than your host, and that's a good thing. One of these people that's been on the show several times, great information about what's happening locally here in Southern California, is Meredith Schlosser. And she has begun a new venture, Meredith Schlosser Team, for Berkshire Hathaway down in Brentwood, California. I want to welcome her to the show and tell us what's going on. Meredith, how you doing?
Hi, I'm good. Thank you so much for having me. Happy New Year, even though we're almost all through January.
I know, and I think you can say Happy New Year all through January, and then you got to cut it off. I think that's the way it goes.
There you go. Exactly.
Okay. I want to ask you right off the bat, you are having a new venture, new place that you're working, a team of people working for you. It's entrepreneurial in spirit, much like the real estate industry is anyway. How are you feeling about it? And tell us what you're feeling about the upcoming 2021 year.
Well, I feel great. I've been wanting to do this for a while. I just haven't had the courage or the confidence, to be totally honest with you, to do it. And I'll laugh when I say it, but I finally put on my big girl pants and, made the move, and it's been awesome. And I'm running on pure adrenaline, not much sleep, but, thanks to my 2 and 5-year-olds, in addition to all other things. But it's been awesome and exhilarating and just everything that I thought it would be, but looking forward to the year ahead as well.
Entrepreneurship and the ability to get out there and doing anything and everything you can to forward a dream is really something I admire. It's not easy. And as they always say, anybody out there who's listening and saying, oh boy, I don't know if I could do that, or I don't know if I would, use that person. If you want to get something done, call somebody who's really busy. Why? Because those are the people that are getting things done. Don't call the person sitting around and doing nothing. So for that, I hope you get a ton of business this year. And I'm really excited for you and how you're doing. Tell us a little bit about real estate, where you're doing it, and some of the challenges you're seeing.
Yeah, so currently I live in Playa Vista, but we're office. We just moved to Brentwood. So 2020 was a big year. Did about 55 million in sales. Looking to hopefully double that this year in 2021. So we'll see if
Great.
I can do that and put my money where my mouth is.
Right.
I think the thing with the most challenging right now, Jeff, is the really identifying the quality of the buyers. Especially I'm predominantly a listing agent. I mean, I work with buyers as well. I do have agents that help me with buyers, but the quality of the buyers, making sure they're pre-qualified, they have the funds, their credit's okay, and getting them to that step of where it used to be every Joe Schmo could come into an open house. Now we're getting more picky, right? We're not just, especially with COVID and all the risks, we're not just letting anybody come into a property. So that's been the most challenging, but in the end of it has been the most rewarding because we know that we're spending time with real serious buyers as well. But definitely, working with people that making sure they're going to be able to close once they get into escrow has definitely been the most challenging, the biggest difference in my career that I would have seen since I've been in it.
Okay, let me ask you a question, and this is a very nuts and bolts type question. Okay, most people out there listening to the show are probably buyers, and they're thinking, okay, I'm competing with 10 other offers, or 5 other offers, or 2 other offers every time I go in to try to buy a house. From a seller's standpoint, you're an agent who just described what you do to sift through the good and the bad. Specifically, tell us, what do you look for financing wise from a buyer to give buyers who are listening to the show a leg up on their competition? Tell us what you do trying to figure out who's the best buyer in a group of buyers.
Right. I mean, everybody thinks it's the highest price, right? But it's not always the highest price. And I have to tell sellers because who has good credit, who has the down payment, who's, working with a sophisticated agent on the other end as well, too. So, it's the same thing as you and I work together. We all need to collaborate. We all need to work together. I can't work with someone with an ego as big as my house because we'll probably never close the deal.
That's right.
A lot of agents we know get in their client's way, of course. So someone that's willing to come in shorter on contingencies. I'm going to talk to the lender. I have the lender cross-qualified. I have the buyer cross-qualify with my lender to make sure they check out. It's all of those extra things, but ultimately someone who gets you what you need, has the paperwork, has good, things to say, the lender has good things to say about them, and is willing to close, within the timelines that the seller wants. And we always try to get backup offers wherever we can to make sure that we're not offers are getting canceled on. We have to, catch up to where we left off.
Interesting. Now, you say you actively seek backup offers. What do you tell the person who's in second position when you're negotiating for the, if the first falls out? How do you get them interested enough to do that?
Well, I think, that's always my biggest goal. Anytime I get an accepted offer, I'm always thinking ahead, right? I'm always thinking that's great that I have, it's like life number 1, life number 2. I'm just kidding. But making sure that you are in line with that first buyer, but you've got to keep that first buyer on their toes. And you can't keep them on their toes as much if you don't have that second buyer lined up. So the second buyer for me, the way that I always entice them to be backup offers, I say, hey, you never know what's going to happen. People are getting divorced, they're losing their jobs, they're moving, they decide on a Monday they want a house, they decide on Tuesday they don't. You never know what's going to happen. So if you don't commit to the backup position right now, there's not a lot of inventory. You're losing that chance. So do you want me to go to person number 3? Because if you do, I will. And when people think about it and you show them the statistics about how many deals potentially could fall through, they have nothing to lose, right? They don't have to put money on the line. They can get out whenever they want to get out. So to them, it's a win-win. So why wouldn't they do it?
No, that's good. And the way you put it is good too, because a lot of people think that, it's either or. It's not that. This is either. I mean, the fact is that you don't know, it doesn't hurt you. And why wouldn't you, especially if you like the house enough to make an offer? You might as well get in backup position because, as you said, you just don't know. And with today's market, with the way the employment is going, I tend to agree with what your way is, and I love the way you do it. It's good.
Right. Thank you.
No.
And I think the sellers appreciate that too, Jeff.
Right.
I had a call with the seller, and she's like, "Wait, you're doing all these extra steps? Like, are you sure?" And I said, "Yeah, because just because they got approved with Joe Schmo from X, Y, and Z lending, I don't know that
Right.
guy. I don't know that girl, whoever that is. I want to make sure they're cross-qualifying with my lender, and my lender can then check out and say, okay, they're good. Because there's so many lenders who just give out these pre-approval letters or whatever to satisfy the buyer, and then you get into the nuts and bolts of the deal, and then you have an issue, at the ninth inning.
Well, one thing about it, and we'll wrap up after this. One thing about it is that nobody gets paid unless the deal closes. But if you have a deal, you don't want to lose the deal. So a lot of people, like you said, will say whatever they want or can in order to secure the deal in escrow, because it's hard to get out of an escrow within the contingency time period.
Right.
Listen, let people know how to get in touch with you. You're such a great agent, and we didn't have enough time to talk, but people got a taste of how great you are. How do they get in touch with you?
Yeah, my website is meredithschlosser.com, and my cell phone number is 310-923-5811. And that goes directly to me. It doesn't go to a random 800 number, or my Instagram at Meredith Real Estate. I would be grateful to chat with anybody that's a listener of your show.
Meredith, thanks for coming on the show. Appreciate it much. Let's get back together towards the middle of the year and see how it's going. Plus, hope you just top that $110 million number this year.
Thank you so much. I really appreciate your time.
Thanks very much. That's Meredith Schlosser from the Meredith Schlosser team at Berkshire Hathaway. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, listening to the show each and every week. Certainly this week, we've had a ton of great guests. We also have, a bit of what's going on in national mortgages. And what do I say by national mortgages? I mean, with Fannie and Freddie and the new Treasury Secretary and the new Director of CFPB, a new HUD person. There's just a lot going on. And usually during the Federal Open Market Committee meeting that is in January, and it took place last week, we usually get something out of it. But what we've gotten out of it is pretty much wait and see. We're waiting on COVID. We're waiting on the vaccine. We're waiting on a number of different things. One thing we'd like to have more of right now is real estate, and we don't. So real estate prices have really climbed. We're looking at 10% this year. To talk more about that and the availability of funds and mortgages and all the good things that we do here at the Mortgage Voice, Connie Hernandez from PMA and Ida Lancaster, also from PMA, have joined us today to talk something about that in the Southern California market. Hi, everybody. Hi, Connie. Hi, Ida. How are you doing?
Hi, we're doing fine. Beautiful day today. How are you, Jeff?
I'm great. Thank you. Okay, let's get right to the topic that I wanted to talk about, availability of real estate. What's happening in the real estate market in your area? Describe a little bit about where that is and some of the difficulties they might be seeing. I think, Ida, you were going to answer that?
Primarily here in the East San Gabriel Valley area, the hub area, it's just going crazy. Houses are not even lasting one day. They're already in escrow. It's just hard to find something. Pricing is going up. The loans are getting a little difficult. I think the lenders are getting a little scared with the COVID.
Right.
To verify employment, and
Right.
they're taking a little longer. The real estate end is taking a little longer. A lot of cash buyers. But what I've seen in showing property is a lot of landlords that have properties are selling their properties. The ones that are available are tenant occupied, and they're selling. I think what happened is they got scared.
What are they thinking? The market's going to crash? Is that what they're afraid of?
No, I think they got scared because of the COVID. Renters didn't have to pay rent,
I
and
see.
got left with the deficit are the owners of the properties.
Well, they've extended that, Jeff. They've
To June.
to June,
Yes.
where
Yes, I know. They were thinking September, but they only put it up to June. So I think we're all looking forward to, I guess, the second half of the year being a little bit more back to normal and renters paying rent and people paying their mortgages. Do they have a real number out in your area as how many people are not paying rent?
No, there hasn't been any numbers that come out, but I know that I've talked to a few realtors of those that I showed, and I asked them. I said, "How are you getting them out of the property?" Because on the MLS it states, renters are moving out, tenants are moving out. I said, "Well, how did you get them out?" Well, what they're doing is offering them money to move out.
Right.
So it
Right.
kind of reminded me back in the short sale days.
Right. Yeah, Connie, I have a question on that. A lot of the loans that, especially for investment properties, are using the DSCR loans, where the debt ratios, if they're paid by the rent, can carry the property, and you don't have to come in with any more money or any more proof of funds. How is that working in a situation like this, where it's difficult to know whether the tenant's been paying or not? It's just an odd situation if you're inheriting a tenant, let's say, and you're trying to use those ratios with which to buy a house. Explain the program a little bit and how they're doing the check on it.
well, it's not working, Jeff.
Right. Okay.
That's why
Okay.
it's becoming more and more difficult for, well, mainly for your new investors, people that don't have deep pockets.
Right.
Obviously, there's opportunities there for people that do have deep pockets, but if you're talking about people that are looking to purchase 4 units, anything under 12 units, and they're not what you would call a seasoned investor, it's very, very difficult because lenders are looking at the experience more so than ever now for a new investor. They're looking at the reserves very closely at what the reserves are because they know
Right.
they're going to have to carry that property. So if the reserves are high, then we don't have a problem. But as you and I both know, when you're not a seasoned investor, you may have some reserves, but again, if they're not substantial, you're going to have a very difficult time qualifying for a loan to purchase an investment property. And some of the lenders that are doing commercial loans, anywhere from 5 to, let's just call it 20 units, they're actually upping their requirements for reserves. They're also looking at credit more closely, and they're not being as lenient on deferred maintenance anymore. So it's not easy for someone who wants to get to a point where they're investing more if they don't have the means, the experience, or the deep pockets. It's just not easy right now.
Right. Okay. So if in fact, and in your area, are there more renters or more people who own houses, or is it split? I mean, some areas there's way more renters, some areas they're not.
No, these are much, well, for San Gabriel Valley, for especially Covina, West Covina, out this area, it's more owner-occupied properties. And we do have some apartment complexes within the city, but it's not predominantly renters properties that are out here. It's more single family.
What is, okay, we have seen some demand on housing that we haven't seen in quite a long time. Luckily, the real estate, the mortgage, I guess the interest rate has really remained low. What happens when the interest rate goes up? The buyer's going to go away, or is there just still too much demand?
Well, honestly, I think right now there is a lot of demand. If the interest rates do go up and there's less demand, it'll just happen like it has happened in the past. The prices will readjust. But I don't really see that happening anytime very soon, at least not in our area, because the demand is there. And in all honesty, a few months back, I really thought the real estate market was going to come to a screeching halt with so many people out of work, but
Right.
it really hasn't happened. It's been quite the opposite.
Yes, I looked at some economic numbers that showed companies were really doing quite well in this particular, obviously not restaurants or movie theaters or any place that has a large number of people that gather, but many businesses are doing as well or better than they have done in a long time, which has surprised the market and has really driven the stock market to where it is. The question of building new homes, what's happening in your area in terms of additional housing coming on the market?
Well, immediate, we don't really have a whole lot of room where in Covina, West Covina, to build. I mean, there's a lot more mixed use. You do see a lot more mixed use where you have, first level commercial, and then you have condos on the second, third floors. And that you do see, but as far as new construction, one, we just don't have the land for it here.
Right.
Maybe out in the Inland Empire, you'll see more construction, but definitely, I think that we just have a lack of land where we're at to be able to put up new housing here. So
I know.
that
That
is a problem because
Right.
the housing is just, we need housing and we just don't have
Of course.
We're just too saturated, though, with the housing. And I've been showing property in Corona, Lake Elsinore, out that way. Even my own granddaughter, who's now 27, trying to find a house, their first home, impossible, without her paying
Right.
$500,000. And she just got her master's. They're just starting their life, and they have to get into a home that's $500,000 is kind
Right.
of terrible. So, we're searching out further.
Listen, we're up against the clock. Could you both let the audience know, the people listening to the show, how to get in touch with you all if they're both needing a great loan officer as well as a terrific real estate agent?
Sure, absolutely. We're here to help answer anybody's questions or concerns. They can reach me. I'm Connie Hernandez. My direct number is 626-422-2017. We're located in downtown Covina on Citrus and Padillo. And Ida's one of our best top realtors, so I'll let you.
Yes, Ida Lancaster with Hearn Realty and Associates. My number is 626-806-4935, and always eager for listings and sales. I do both.
Thank you very much, both of you, for coming on the show, giving us an update of what's happening in January 2021. And we'll talk to both of you soon, get another update in another couple of months. Thanks very much for coming on the show.
Thank you for having us, Jeff.
Thank you.
Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show. We are on 5 radio stations in 3 different states. We are on YouTube, Jeff Barton, the Mortgage Voice. We're on 8 podcasts, just a whole bunch of places that you can see and hear the show. We're trying to pick up some additional stations, as well as expand our daily Mortgage Minute, which is on Facebook and on LinkedIn. We've ventured into Instagram and Twitter. Boy, it's been quiet nationally, hasn't it? Daryl, what do you think about that?
Yeah, there's a lot of things that were stirring up that all of a sudden just, fell to the ground at this point. And whether they get brought up again or not, I have no idea.
Well, I happen to like the quiet. And so when I was thinking today about the show, I was thinking about days gone by, as old people often do. And I was, what's that?
The olden days.
The olden days. And one of the things I was thinking about is taglines and how news officials or news people or even politicians or anybody had this tagline that they would say every time that you would hear them. And so
newscaster that used to say from the desert to the sea to all of Southern California. That was Jerry Dunphy, I think.
Great. Okay, so that's it again. I'm not from Southern California, so I don't know that one. I remember the ones with Walter Cronkite. Anybody out there who's old enough to listen, his was, and that's the way it is on, and he'd say the date. That was his big tagline, right? And he would say it every show. But this particular president has a tagline too. After every speech, he says, "And God bless America, and watch over our troops." That's his tagline on a daily. So I tried to think, what would be a good tagline for the mortgage industry, for people who are in the business like myself? What would be a good tagline to really wrap up not only what we do for the show, or what we do for, I guess, encapsulating the service we bring? And
Shut up and
what do you?
will work. Yeah,
What is it? Shut up and deal with it?
deal probably will work.
No, something, anyway, if you're out there right now and you're thinking of a tagline, or you've got one. I mean, there's so many people. If you go to TikTok, or you go to some of the other, whether it's Twitter, and by the way, Twitter is impossible to follow all the hashtags and the at, and I'm still back in the Stone Age of Twitter. It's just words. It's not all the symbols and everything else to link you into 100,000 other people. And I'm sorry, I just wish I could get into it, but it's just not that interesting to me. I don't care, but I'd like to, because I'd like more. Anyway, so if you're out there and you've got some great tagline, hit us up here. Or contact me, Jeff Barton, at, what are we, at themortgagevoice.com, or go to my blog, thebartonblog.com, bartonblog.net. And try to give us a little help in that. I love those taglines, by the way. There's one, I don't know if you watch Chris Cuomo. He's got one. He said, "Let's get after it." I love that. It sounds so aggressive, doesn't it?
Well, I mean, Wolf Blitzer's got the Situation Room. I guess if
Yes.
situation, he wouldn't have a show to do, right?
Yeah. And again, all the news I can't watch anymore, but it's been so nice to be quiet. I'm not like in a Twitter war with somebody, or some kind of Facebook where you have to tiptoe around the guy who's just yelling and he's been your friend for 20 years. You're like, dude, just calm down. And that's really all I have to say about any of that, because I just like enjoy my silence, and it's going to heat up and all the rest of it. So let's get to a little bit of what's going on in the news for the real estate and mortgage industry. At most places in the country, real estate prices have remained high, and we anticipate, and I've read some site, whether you go to Housing Wire, or you go to Mortgage News Daily, or some of the other local sites that you might belong to, 10% this year, we might see real estate prices rise. Although there are some signs that we will have some help along the way. The whole home builder index is good, meaning that the home builders are bullish on what's going on. We're anticipating a large number of homes, 1.5 million homes being built this year, which will really help. We really need about 1 million homes a year being built. And if we have 1.5 million built, that will really alleviate some of the not congestion, but some of the compression on prices and availability. We anticipate, because the Fed has said so, that the short-term borrowing by all their major players will remain at or near zero. And because of that, and the Fed policy of buying mortgage-backed securities and the treasuries, that we're going to see mortgage interest rates remain where they are for a while. As I said last week on the show, and I still continue to believe this, as I'm not the only one, many people do, we will see rise in interest rates this year, but we're not going to see massive rises, meaning that the affordability for purchases, either new or used homes, existing homes, is still going to be excellent. But we will see the refi boom that has been occurring to the tune of 3.6 or 7 trillion dollars in an average year. We might get $1.5 trillion in the marketplace. So we've doubled really our volume by really increasing what we do in the refi market to like I say, $3.4 trillion last year. So we're going to still see a $3 trillion plus refi market this year. But we will see interest rates go up to about 3.5. This is my prediction. Like I say, not mine alone. Go to Housing Wire, go to Mortgage News Daily, read some prognostications of what they have at Fed, or go to HUD. There are a lot of government websites which will show you what's going on in the economy and in the marketplace. The inflation rate, they're trying to say that the inflation rate will probably be about 2.6, 2.7% if all things go well. And that includes Q3 being, just popping with their economic recovery. Where Q1 is going to be rough because COVID is rough. Although, Daryl, I got a shot yesterday, by the way.
Did you?
Yeah, I got a shot. It was really well
Because
run.
your birthday and my birthday, I'm not old enough yet. But I'm
Okay, well,
Yeah.
catch up.
I hope
You know, yes, exactly right. Even if you don't, you do, right? I mean,
Now they
so
show people receiving these shots, and I've never seen a needle being jabbed into somebody's arm so far. I mean, did
you
it
know,
come out the other side?
it really is disservice because anybody who's afraid of needles and sees those needles going into the arm,
Ooh.
just forget it, right? I said the same thing to myself, although it's scary. Needles are scary. Who likes needles? Okay, you're a scary person. But if you're like me or most people, you hate them. It really wasn't a big deal. The needle itself was in and out, in about 2 seconds. But I wanted to comment on how well run it was. This was done in the CSUN, California State University in Northridge. And there must have been, I don't know, 150 people aiding in both the line, and the line is the main thing, right? Once you get up to where they issue the shot, they take your ID, they go in, they register you, and they come back, and the person who did the registration is also the nurse or doctor. I happen to have a doctor who gives you the shot. So they come out with the shot and your ID back, boom, you're in and out. You wait an additional 15 minutes in another little area to make sure that you have no allergic reaction, and then you're gone. The whole thing took less than an hour for me, and I had signed up. I was one of the lucky, I don't know if I'm lucky, I just kept trying to get online for an appointment. But if you're out there and you have some concerns about it, you can hear my voice today. I sound pretty good. It doesn't sound any worse for wear. And so that's what I have to say about that. And I think as a result of both the vaccines increasing every week, you're going to see numbers going up, and you're going to see death rates, and you're going to see case rates decline. Now, I don't know where that is in terms of your comfortableness, if that's a word, with which you feel good about the economy. But Q3 is when it's going to happen, and we're going to see really the economy explode at that point, because most people are going to say, hey, I've had my shot. My area is 65, 70% with a shot. I'm going out. I don't care. Now, in my house, everybody's home until everybody, 80%, is ready to go with herd immunity. Anyway, that's my bit for today. Thanks very much for listening to the show. I do appreciate it. And we will see you next time. This is Jeff Barton for The Mortgage Voice. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.